What's happening? Henry here from the full story. So guys, today I wanted to give you a quick overview of the methodology I trade with these days. You know me, recently I was trading breakouts and mostly break and retests, but of course, as you all know, what happened to me when I went to vacation in Uganda last year, and when I came back and the situation, so I decided to switch. Yeah, that's it. So I want to show you a quick overview of how I trade right now, and how I use limits, or what we call limit orders, sell limits, buy limits, to execute my trades. So let's first delete everything here. Obviously, you know, in the past days I was using this kind of sorts, a trend line, what, but of right now, of recent, I don't use anything. I don't use anything. I just use a little but understandable methodology, which is liquidity plus what most of you will refer to as order blocks, which I call supply and demand. You know, some ICT people like to like to complicate things so much. So this is the thing. This is card JPY. I was looking at it last, I think 2 weeks back. I didn't catch the sell, but I caught the buy. So let me show you why. Obviously, we are going to do some little back testing, and I show you how it is done. So this is how the market was actually trending. You see this, we have a, sorry, give me some little time. So we have a supply level over here, and you know, some people recently are saying, if price reaches supply, you sell. If it reaches demand level, you buy. That is not a thing with this concept. You need to know what is actually happening before you take a buy or a sell entry. So this is the thing. We had price coming into the supply zone. Before, when I first started trading, whenever I saw something like this, I just needed to see a candle or maybe any pin bar or what, and I started to sell, thinking that price may just go down. But that is not the case, bro. If you do it like this, you may win some, but you may also lose some trades, I tell you. That's not the case. So here, I was looking at this trade, you know, and I saw that price was in this supply zone, and it failed to break out. So first time it attempted, it failed. So it created a zone. So sorry, it was trending in a zone. It failed to break out, but every time it reached in this zone, it sold. That's what I mean actually. So what I needed to do, I just went to the 15-minute time frame, because I like trading from the 15-minute, because that is where I get the high risk to reward. So what I drew was I drew another supply. We know already prices in the supply area, so I drew another supply on the 15-minute, whereby I wanted to see something. I wanted to see, if I want to sell, I wanted to see a shift in market structure. So you guys, if you know a shift, which I mean, if price has been creating, let's say it has been creating higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low. What I need to start selling is, I want to see a shift in structure. So this is the recent higher low. So it created equal highs, which you call down M. So what I wanted to see is a break of this structure, and again I wanted to see a continuation to the downside, then to confirm that I'm going to actually sell. So this is what I was looking for. So I saw this, and you already know I drew another supply in the zone. So this is where I'm anticipating where I'm putting my limit orders or my sell limits. So when price broke this structure, this one over here, when price broke this structure, then it confirmed that we had a change of structure, then we had a break of structure. Then I knew that when price comes here, we're going to sell again. So the next thing was to wait patiently, because obviously price will not come directly after breaking structure, that it will come directly into the zone and then sell off. No, that is not how it actually works. You have to wait. So, and as you wait, you have to wait for the liquidity to be generated, and after the liquidity is generated, then you sell off again. So whenever liquidity is generated, it has to be taken out before price actually goes the direction it has to go to. For example, we had this liquidity generated over here. Most people would think, okay, now price has created another lower low. Let's say it has created a low and another lower low and another lower low, so we are going to sell from here, which is not actually the case. You have to wait into the point of interest, not into this liquidity zone, because this is what I call a liquidity zone, according to what my new mate is teaching me. So this is actually a liquidity zone. We don't sell off over here. We don't do sell off over here. Where is my text? Don't sell. Let me leave it. Anyway, so what I was waiting for was for price to come over here. So by the time price came over here, there was some kind of news. I remember I didn't take a sell. I had limits here, but I didn't. I deleted them because we had high impact news, and of course, you know, whenever high impact news is coming, it might take out the stop losses, or it might do what we call stop loss hunts before it actually goes into the right direction. So what I was looking at was to see actually what is happening before I take any buy or any sell opportunity. Sorry, before I take any sell opportunity. So I was just looking at this, and when I saw that news came out, it first triggered, or it first took out all the sellers who had stop losses over here. So I said, it's okay, let me wait for the candles to cross. So when the candle crossed like this, it was bearish and it was in my zone. So I just took a sales and I had my stop loss like this, and I was anticipating that this price will bring or I was anticipating the market to sell off until to this zone. Now you might ask, why this zone? Why not this below zone? Because you said it might sell off, it is in the supply zone. Well, whenever I trade or whenever I use this strategy, I actually realized that most of my trades, if I use a right risk to reward, I get approximately like 1 to 4 or 1 to 3. So what I look forward to is to enter. I take out. I execute my trades. I put my stop loss and my take profit at 1 to 4. When I hit it, it's okay. I'm done. So, and of course, another thing which I will tell you about this. Price first took out the buyers. Sorry, price first took out the sellers. So what I knew was very simple. So if price came and took out the sellers here, there was a possibility. There was a possibility that price was actually going to come back into this zone. So that's why when I sold off, I exited around 1 to 4, around here. sorry, around here. And again, this is the thing, the same format, the same way I traded, I got a sell over here, the same thing I got a buy over here. So I was considering this zone. You know, this zone is a demand zone. Over here, you can see it from over this zone. From over this zone. Price used this zone as a demand, Price reached here, it went up. Reached here, it went up. So what I was looking at to was something like this. So this is a price sold off onto this zone, and then it went up. We got a sell, but as it was going to trigger our sell entries, we had a movement like this. Let me show you. We had a movement like this. A high, a low, a higher high, a higher low. Then here we had some market structure shift, which I want to consider because you know, we are looking into a higher time frame perspective. Then we had a high, and then we had a low. Sorry, we had a higher high, and then we had a higher low. This is like a continuation of a trend, because if price was to go directly downtrend, it had to create a higher high, sorry, a lower low and a lower high. But here it just created a low. So what do we do here? We had this zone over here. This zone over here. This zone, I usually mark up things like this because I don't want to enter any trade around this zone. This is a no trading zone for me. So I want to see price taking out this liquidity over here to start buying if I'm to buy. So what I was waiting for was this. So let me show you it over, I think, out of 5 minutes. You will see it very well. Let's delete this. Let's delete this as well. Let's delete this. We obviously know price closed above this by a week. You know, using this trade methodology, every detail matters. Every detail matters, and you have to look out for every detail before you execute any trade. Obviously, the reason I marked up this zone as a liquidity zone or as a no trading zone was because this is where price started off. Because you see, we had a low, we had a equal highs, and then we had a lower low, and we had a lower high and a lower low, and then here we had almost equal lows, and then a high, and then from here this is a high which took out this, let's call it equal low. This is the high which took out it, because we see price it closed above this zone. So what we are looking at for? This is putting this zone as a no trading zone, or calling this zone our no trading zone or our liquidity zone. Whenever price comes into this zone, we have to make sure that we know where is our point of interest. We don't take any trades from here unless we just don't want to follow our trading plan. And if you don't follow your trading plan, you're obviously gonna lose money. So this is what I marked up as a no trading zone. So we saw price, it came all the way up here. We never took any sell. Sorry, we never took any buy around here. I was waiting for if price could have come here before it reached our sell zone, I would have taken a buy, because obviously here, you know, there is a shift in market structure. We know a change of character and a break of structure. We've seen them, change of character, and then we have a break of structure one. We have another break of structure over here, We have another break of structure over here. So obviously you see that if price had come into this zone just like this, I would have taken a buy to bring it up into this zone and then a sell again, right? But price, didn't come into this zone at that time. So what I was waiting for was for price to actually come into this zone again after I caught a sell. So when price came into this zone after I caught a sell, we know we don't have clear, more so on the 15 minute and the 30 minute, we don't have clear lower highs and lower lows. We have only a low into this zone, which we call a point of interest. So in this zone, I caught a buy. I didn't need anything because I marked it up already. So what I was waiting for is for price to come into this zone. I put stop loss below our level, which was in fact I used 10 pips stop loss. I didn't use 8. I used 10 pips stop loss, and then I was waiting for price to take out this high because I knew obviously price will take out this high because obviously we closed above here before, so price was going to close above it. But I didn't hold to this point though. I went out at a 1 to 4. I went out at a 1 to 4. Let me teach you another thing, you guys. Let me show you. You may think it's just card JPY, but let me show you something again. What happened again? Price took out the high. What happened? There is no a very big significant higher low on this let's call it a bearish trend here, which most of you would have called this one over here. Also, let's go to the 30 minute. You will not see it because for me I look out for 30 minute and 15 minute. There's no something like more significant which you would have said now price is just actually going to continue going down, because we know if price is to go down we have to create significant lower lows and lower highs, something like this, like this, like this. But look at this one over here. It's just like if you go to the 4 hour, let me show you. Obviously I don't trade using the 4 hour, but I'm just showing you. If you go to the 4 hour, it just straight. We had a lower high. Let's say we had a higher high, sorry, a higher low. We had a high high, but there is no something so significant like this. You might call this, but I don't literally, unless we had got it over here, and then we say, okay, now we have a high. We had a lower low, and then we had a lower high, then we had a lower low, and a lower high. But this one is not significant. I don't know how I even ended up not taking this buy over here. But I anticipate that due to the fact that price crossed below this point, which is actually acting as support by weeks or by week, I anticipate that price might use this zone as a liquidity zone, and then might use this zone over here as our point of interest over here, and we short from here coming all the way down. And I'll put limits, of course. If price comes over here, I'll be looking to sell this thing, card JPY. I'll be looking to sell it up to this zone. Okay, so let me show you on Euro USD. I wasn't trading Euro USD of the past years because it was so tough on me whenever I used my actual or my whenever I used my trend line trading it. I was literally forcing things. So I used to draw something like this, and I could force it like this, looking for just a trend line to catch any move. But let me show you something over here. I made a loss. There's no strategy which is actually gonna work 100% all time. You gotta make sure that you have the right risk management in place. So this is the thing. If you think I didn't take this, or if you're doubting my thing, you get to follow me on Twitter, because obviously these times I'm not. I deleted, in fact, Telegram from my phone because it was distracting me. I could look out for other guys who were trading, other groups, what. So I just deleted it from my phone, and I just kept it on my laptop. Obviously, if you have the same issue, you get to do a choice by yourself. You either delete the social media and focus on yourself, or you keep the social media and you keep yourself comparing, and you keep comparing yourself to others. But I challenge you, if you delete your social media and you only focus on yourself, you obviously see things changing. I'm telling you this because I tested it. If you could only see, because I've been correcting, let me show you something over here. I've been collecting data for a while. And keeping it, because I don't want to start trading big capital when I don't actually have that confidence in the strategy I'm trading. I'm going to show you it over here. Wait a minute. Before it loads, let me show you this thing. So this is the thing. You see this zone over here? I took this buy over here, but I exited at around 1 to 3. I remember, because I was at work. I exited when I saw price was it was close to New York Open. So yeah, it was close to New York Open. I closed the trade around here. I remember. I was at work. Let me show you the same thing, the same methodology. Let me delete everything and we start again. Move drawings. This is Euro USD. I saw price was around this zone. So this zone acted as our demand zone. On 15 minutes, the wicks will act as our support or the demand zone. So on the 15 minutes as well, this zone would have acted as our liquidity zone, which I like to mark up like this. I don't take any trades in this zone unless price taps into this zone. Then this is where I take the trades from. But let me show you the thing. Price made a high, made a high, a high low. Sorry, made a higher low, a high high, and then made a higher low, and again another high, and then came here. It created a higher low and a low. Sorry, and a high. Then created it created a higher low and then another high. Sorry, another lower high. You see, things are starting to change again. What again we see here? Created a low, which created a low, because this low over here is below this low. So this is actually reading the market structure, the naked market structure. Created a low and we created a high. So we had this lower high, then we broke it. So what do we have to see here? So we broke this zone over here. So what do we see? What we look out for is where is that lower low or where is that low which created a break or which created a change of character. Obviously it is over here, so I marked it over here, a no trading zone for me, or a liquidity zone for me, and I marked this as a break of structure, sorry, as a change of character. Then I need to see some break of structures happening before I put my limits. So we have another break of structure over here, so we have another break of structure over here, and then what do we see? We see market coming down again. So here I set my buy limit into this zone with my stop loss below the supply zone. Of course, now you see that we don't just trade, or we don't just buy in the zone of demand or sell in the zone of supply. We have to look out for something which gives us an edge, or which tells us that we are about to buy before we actually buy. So because I was going to for work, or I was not going to monitor this trade, I didn't give a tight 5 pip stop loss. It was kind of 8, or kind of like 8 or 7, and then I was anticipating, I was thinking that price was coming to take out all these highs and continue upside. But because you know, you cannot control the market, I just set out a 1 to 3 around this zone. I remember, obviously it was around this zone. I don't know if I have screenshots, you know. I'm not doing this to just to actually to tell everyone, or to seek confirmation to everyone, or that I take these trades. Well, you take it if you want, because obviously at the end of the day it's me who is benefiting, and if you use the knowledge I'm telling you, you can also benefit from it again. So there's some kind of a pro-farm trader who I like. Is called Daniel Cheng. I don't know if you know about him, but that guy, he talks about something which I literally want hearing all the times, which is it's you against you and me against me. So you get to have that mentality again. So I took that buy, exited around here. Yeah, it was 1 to 3. I remember I have an account which is like a $3,000 account, which I got about 3%. I risked one and I got 3%. So price took this and came back to the lows. Again, something I was looking at broke this demand zone. So what I was looking at, next was, now this is going to be the supply zone we're going to sell from, because obviously we broke this zone. So this zone over here is going to be the liquidity zone for me. This is a no trading zone, and this zone over here, huge as it is, this is going to be my supply zone. So this is where I'm going to look out to get my sales from. I went to 5 minutes, but I remember this thing hit my stop loss, obviously. Because it was a wide stop loss, I didn't take out I didn't get a nice thing out of it, so it hit my stop loss before it actually went all the way up over here. So it doesn't matter. Let me show you another thing over here. So we had a high, a low, a high, a low, sorry, a higher high, a higher low, higher high, higher low, had a higher high, and then we had a higher low, and then we have a high, equal loss, have a lower high, and then we have a lower low. Hope you can see this. Have a lower low, and then what do we see? My initial zone over here was, where is the high which took out the lows. It was around here. So this is my no trading zone, and then this zone over here was going to be my point of interest where I set my limits. So in this zone I set my limit orders. So it was now just a waiting game. They were not triggered. I wasn't happy that day though I saw price falling all the way here. So what I did next was to mark up this zone, just to change my zone. Just here I changed this zone and put this one as my liquidity zone, and kept this zone over here as my zone, as my point of interest. So this one was my liquidity zone. In this zone I don't take any trade. I only take trades in this zone. Okay, only take trades in this zone. But I missed this trade as well because I was like, I set sell limits in the middle of the zone, and I don't know whether I have to learn this thing again, where I have to sell where I have to set limits just below the zones, and I accept the risk or the extra risk. I don't know, because I've been missing out trades lately so much, more so on gold, which I admit. But well, you can see that it actually works. So what I did was to set my limits over here, and then my stop loss was around here, and I was anticipating, since we broke this zone, price may come, or was going to come, into this zone over here, which was like a 1 to 10, but obviously, you know, I take a 1 to 4. I'm going to learn to hold because this is my new thing. I'm not so much new, or I'm not so much experienced trading this format, because I'm still correcting data. To be honest, I'm still correcting data. So you see, it sold off into this zone all the way, and again it broke this structure. So what am I looking for again? I'm looking for something like this. So this is the zone which took out all these zones. So something is here. This zone over here, this zone over here, and again we have this thing. This is my liquidity zone, and this is my point of interest. I may extend my stop loss above here, and then I'm targeting all the way down here. So what I'm waiting for Euro USD to come into this zone, and I sell. Take a screenshot of this and wait for price to come into this zone. If you see price coming into this zone, I assure you, price will have, there will be a reaction over here, which will give you around a 1 to 4 or a 1 to 3. Even if it has to reverse, it will give you a 1 to 4 or a 1 to 3. I assure you on this. Let me also take a screenshot. I'll come back to this after. So let me show you the gold. Let me show you something about gold. Gold did me dirty some 2 days back, but it's alright. Obviously, this is what I talk about. Even if price is going to come all the way up, there's a 90% chance that price will give a reaction into this zone, which may give you a 1 to 3, 1 to 4, before it actually goes into the direction where it has to go to. You know, when I was still learning this thing, I made silly mistakes, which I admit. I was counting this. It was still an uptrend, but I was still forcing it to buy, which is obviously not good. So let me show you something over here on gold. You know, this is over here demand zone, and price came here. What do we have? So over this zone, let me go to the 15-minute because I got this trade over 15-minute. Jesus. I scalped this trade and then I forgot to take this trade again. I don't know actually why, but we see on the 15-minute. Oh, because I like trading gold on a 5-minute to be obvious, to be certain. So I saw this zone as a liquidity zone, but as well I saw that a price might actually give a 1 to 2 or 1 to 3 up here. Then I entered the buy over here. I got some pips, then I forgot to buy again over here, because the real deal was to actually use this zone as a liquidity, and then use this zone as a point of interest. You know, for gold I've seen something. It's not something like which is happening on other pairs. For gold, even if it's this zone, price may take out these sellers over here, or might take out the buyers over here by hitting their stop losses, and then actually goes the anticipated way or the anticipated direction. So I have seen it often by my data, because you know I correct data and I look into it often. So I've seen gold doing the thing. So all I want to see is for gold, most on the 15 or 30-minute. If I see a candle closing on 30-minute in the zone, this is where I want to enter, because I know all the liquidity is being taken. If it's my point of interest zone, I want to see the 30-minute closure. If it closes just like this into the zone, I'm buying. Obviously I took a buy over here initially because prices had tapped into the zone already. So I took a buy. I got it out at a 1 to 2, 1 to 3 points, 1 to 3 around there. I exited because I had a tighter stop loss. It was just below here. But I forgot to take the buy again, because I had to take the buy because this was a zone. So what I'm looking at on gold again is something like this. This one to be used at my point of interest. And then this is my zone where I'm actually looking into, calling it my liquidity zone. So anything happening all around here, I'm just waiting. But for gold, I don't set limits. For gold, I like trading it when in real time. For Euro USD and other pairs, I set limits. Let me show you another pair which did me dirty today. It took me out at break even. Oh dear, this was it. So this is a GBP AUD. So something like this. This was my zone, but I saw it when it was actually quite late. So you see this zone over here. Wow, see, this is where we had a change of character over here, and this is the zone over here which caused the change of character over here. What did I do? After here, I was looking to something like this. Had another break of structure. Had another break of structure, and then again we had another break of structure over here. So something I needed to do was to actually put my buy limit over here and target over something like this. But I actually had positions in this trade, but I didn't hold, sorry, but I held. And then this night, today, 31st July, wait, it's not July, 31st May 2024. But a night to 31st, I had these trades. I know I would refer to these videos a little time after. You obviously know trading is a journey. I will have to refer to these trades, so that's why I'm mentioning about dates. This spread took me out. I have screenshots of this, I think. I may just attach them as well here. I have screenshots. So price took me out over here. I wanted initially maybe to cross some partials over here, because I had a tight stop loss when I entered, because I entered quite late. I entered around here, and I had my stop losses over here, just like here. So I wanted to take out a 1 to 3 around this zone. My stop losses were here, something like this. I wanted to take out some partials, because I had two positions. So I wanted to cross a 1 to 3 and I hold, because GBP AUD just respects price action so much. So I didn't expect so much manipulation, but well, it is what it is. And again, there is something over here which you can look out to. I didn't catch the sale because I was, I have been having a busy schedule. If you know, if you reached into my DM, I told you already. Ever since I came back, things haven't been that good, because I, have a full-time work, or a full-time job which I do. And when I'm doing this full-time job, I don't trade full-time. There's some ever since I got an accident which happened when I was in Uganda, when I went back for vacation. I came back when I literally was out of focus. I lost so many things, money, what. I lost so many. So I I'm just correcting myself back. So here's the thing. I would have called the sell as well. Let me show you how. Because have a high, a high low, a high low, have a high, and then we see we have a low over here. And then what do we have next? We have a high. This high took out this low over here. So we started, we had a change of structure over here. So structure changed. So this one over here is in the same zone. So we have a change of character over here. Or I would have just actually pressed this zone over here, my liquidity zone, because it's very obvious over here. We have this change of character, so we have too much of a break of structures, obviously giving us an indication that price is going to sell when it comes back into a point of interest. Too much, have so much indications. I don't actually know why I didn't take this sale. Well, it happens. Now you see, when price came into this zone, what did it do? It sold off. Same thing, it sold off. I gave it a 1 to 6 and it's still running. Still running, a 1 to 6 and still running. But you see, this thing, or this strategy or methodology, even because price is trending downwards, it still gave some nice pips over here. So if I was, let's say, trading my stops, I would have got stopped out at least a 1 to 2 over here, you see. But because I'm learning how to hold these trades, because in the near time I want to be putting in bigger lot sizes and holding them as well, because my plan right now is to actually go all in full time, because that's why I'm collecting too much data right now. So this is the thing. By the way, I think I need to do so many of these sessions, or these market breakdowns, because they are too helpful. Let me show you another thing over here. This is NZD USD. And again, there is another trade which I had, it was USD CHF, I think. USD CHF, where is it? I marked it. Let me show you it. Yes, over here. You see, the same thing. USD CHF, let's go to the fifth. No, it's clear over here. I marked this thing over here and I forgot to set the limits. So I came back after, because it's not always on my watch list. Whenever I don't see any kind of structure or market structure which I look into in the markets, I just look out for all the pairs and I try to mark out and see how they will play out afterwards. So this is USD CHF. I marked this thing over here, and I marked because if you know already what you're doing, you don't need to mark out everything. But yeah, obviously this is where I had my no trading zone over here. But you see, price came back over here. So if I was actually looking into these charts, I would have actually got a nice trade over here. A nice one. A nice 1 to 10. Almost. Nice 1 to 10. Still running, huh? It's still running. And you see, something I told you already about. Whenever price comes back into this zone, let's see. For example, here is our demand zone, and then we have this no trading zone over here, which shook our price levels up to this zone before they sold off. So price, see this zone? Again, price came into this zone. Then we would have got a buy opportunity into this zone with stop losses below. We would have got at least a 1 to, you see, at least a 1 to 4 already in this zone before it sold off. Same thing, same format. So I'll actually do more of these videos often, I think on a weekly basis, because I've been so quiet, I know, but I understand that even teaching your strategy is one thing which makes you understand it even better. So guys, go try out this thing, try out this strategy, check it out on your charts and see how it actually works. Let me try to draw it over here and show you. Don't overcomplicate things, just look out for one thing like this. Let's say price has been going just to the upside like this, and then it makes something like this. If price didn't change in these zones like this, just look out for price to come in this zone and sell off again. I'm telling you, this thing works. This is actually where you call no trading zone, and then this is where you mark out as your point of interest. In the next video, I will show you, or I'll be doing back testing as you will see it. I don't know when I will upload it, because obviously not quite well as well, you may know, but I will be uploading it so soon. When I do back testing of this strategy, you'll see it works. Okay, peace out.